Christ is king, it's where we belong. Stay with the dream, don't lose your way. Right way's the fire that'll light the day. Keep it simple, let the moment arrive. 3-8 trap keeps the hope alive. Hold on tight till the signal's near. Right way's the trail, we're breaking through fear.
Good morning, fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for September 4th, 2025. Well, I hope everyone's having a great morning and ready for another busy day. Let's take a look at what happened overnight here in these markets. First off, if we take a peek at those Asian markets, a little bit of a mix over there, but they were mostly higher. Australia finished up 87.70 or 1% higher. Hong Kong was down 284.92, 1.12% lower. South Korea made it up by $16.41 or 0.52%, while the Nikkei really had a good day, 641.38, 1.53% higher overnight. India's markets were up $19.25 or 0.08%, and Shanghai fell by 47.68 or 1.25% last night. So we'll want to be keeping an eye on those. If we take a look at European markets this morning, European markets also have just a little tiny bit of a mix. We have the DAX substantially strong here this morning, up 167.33 or 0.71% higher. FTSE's up 2307, 0.25% higher, and the CAC is just modestly lower by $8.55, 0.11% lower. Here in U.S. markets, we have our futures all in the green, with the Dow recovering from some negative prints here earlier this morning. Right now, the Dow futures are up $4 here, and we've got the S&P 500 futures up $11.50, and NASDAQ futures up $64 even here this morning, trying to come back to a little bit of bullishness here in the market. But unfortunately, we've got a lot of resistance, so we're going to have to keep an eye on in those markets. Let's take a look at what we have going on here in our bonds this morning. Bond prices this morning a little bit lower. That is helping the dollar here just a little bit. We've got the 2-year bonds at 3.60%, 10-year bonds at 4.19%, and that 30-year bond to 4.87% as we wait on jobs numbers today. We could see some fluctuation in these bonds around those jobs numbers and jobs figures, so kind of keep that in mind. If we look at the U.S. dollar here this morning, U.S. dollar just a tiny little bit stronger, right now up about 5.5 cents, trying to hold in here on that U.S. dollar. Now, as a result of that, yesterday we had precious metals zooming to the upside. Well, they're pulling back here this morning pretty substantially, as a matter of fact. If we take a look at gold, gold gapping a little bit lower after hitting record highs yesterday. Right now, gold futures down $34.90, and we're at $3,600 an ounce so far this morning. So pulling back here pretty good. Silver is also resting back after that shooting star yesterday. Silver down 46 cents, coming in at 41.60 in the futures. Copper is also a little bit lower here this morning. We're seeing just kind of a general pullback here in metals. Copper right now is down by just about 6 cents here today, so keep an eye on that. We've got platinum Also moving lower here by 36.90 an ounce, or 0.254%. 2.54%, and palladium is also lower here this morning by 22.60 an ounce. So keep an eye on that. Almost down 2% as well there in palladium. Now, if we take a look at crypto markets, well, they're having a little bit of a trouble here this morning as well. IBIT, after a good pop up yesterday, gapping a little bit lower, down $1,001 a coin here this morning in Bitcoin. IBIT obviously running into some resistance here in the chart and backing away from that. Ether is also pulling back here right now, 43.51 a coin lower here this morning, or 0.97%. Still holding in a bullish pattern, however, so keep an eye on that. And we're right across the board in those cryptos here this morning. If we take a look at what's going on here in oil this morning, well, we continue to see pressure here on that oil market. Oil down $1 a barrel here this morning. It's $62.97 a barrel. Pulling back, as you can see, breaking some support here, breaking that little upside trend. Brent crude is also lower by 66.77, and natural gas in a kind of surprising little rally that we've seen here for a while, trying to get a little recovery in natural gas. Right now up 2 cents here this morning, so keep an eye on those charts. So what does all that mean for the day? Well, how about we settle in, let's buckle up, let's get ready for the Thursday edition of the Morning Market Prep video. Good morning, everyone, and thanks so much for being here. I hope everyone is ready for another busy day. We've got a lot of economic data and a pretty good slate of earnings here today. We'll cover those in just a second. First off, let's take a look at these index charts, see if we can figure out how we might want to approach the market for today. Remember to shake off that bias and really look at the charts for what they are, not for what you want them to be. So first off, here in the diamonds, you can see we're tucked up against this resistance. We struggled in here yesterday. We had that nice little surge right at the end of the day to perk us back up, and we're trying to pop just a little bit this morning. We've got to get through this resistance up here, and if we can, then we'll start progressing up through that area and see if we can get back up here toward all-time highs here in the diamonds. However, if the bears have anything to say and we start pushing back, we'll see if we can break below there and then start coming down toward this support area of the chart, and of course the bottom of that big white candle, which if we were to break that, I think there could be a little bit of concern or fear starting to come up in the market, particularly if we were to fall through this area of support. So watch that carefully here. We seem to be struggling with a little bit of momentum right now, and there was that report from Goldman Sachs suggesting large cap stocks should be avoided and maybe even deleveraged from. So we might be seeing just a little bit of weakness show up here in the market. Of course, the jobs numbers today could be very important to how we make that decision here today in our indexes. Let's take a look at our SPY. Now, our SPY continuing to stretch back up, and we're trying to test this resistance in the chart, but we do want to remember that we broke this trend. Now we're rallying back up, and we're coming into contact with kind of a double whammy of resistance here. If the bulls can push right on through there, then I think there's every reason to believe that we could start moving right back up here to retest these highs. No question in my mind that that's possible. Now, if If those bears, however, were to find some inspiration, this is exactly where you'd be looking for it. Right at that double whammy of price resistance. And if the bears were to push back, well, we'll start looking into some of these areas for that pushback, see if we can hold any of these areas of support in the chart. If we were to break back down below this area of price support, I think that would probably start to raise a little bit of concern. Popping down below here, I think we're going to be looking at some straight up fear in the market. So watch that carefully. But if those bulls can push right on through, hey, and right now, I think there's every reason to believe that's possible. Now, our QQQ is the weakest of the indexes here. And watching this one closely yesterday with just a whole lot of back and forth, a whole lot of uncertainty, even though we had Apple, Google, and Alphabet really having a great day yesterday, there wasn't a whole lot of bullishness in the QQQ. So we'll want to watch this closely. If we can continue to push through, we've got some earnings from last night helping to provide a little bit of upside lift here. In here, we'll see if we can get a little bit more going on today to try and help that. But you'll want to be keeping in mind as we push back up here, we've got this downtrend, we've got this price resistance level right in here that we'll want to be paying attention to. And we also have that kind of problematic pattern in here of a head and shoulders that we'll want to be watching pretty closely. So if those bulls can push right on through here, we need to be able to break right back through this level up here, push up through that resistance in the chart. And then I think we can maybe take a sigh of relief and maybe suggest that this head and shoulders has no power here over the market in the Qs. However, if those bears were to have anything to say today, this is exactly where you'd be watching for that potential failure pattern to occur. So if we were to get some bears to come in here for any reason and start pushing that lower, we're going to raise a little concern here, probably in the QQQs first. And right now, this continues to be the weakest of the indexes here in the market. So watch that carefully. If the bears were to push back, we're going to start looking at these areas right in here, breaking those down. And then the real concern would be if we lost that area of price support in the QQQ. So watch that carefully on the NASDAQ. Our IWM is the strongest of the indexes. Our IWM still holding in that upside trend. Never broke that upside trend. Still looking good in here. A little bit of back and forth yesterday in that price action. A lot of hurry up and wait. We still need to break back above that big white candle here. So a good bullish move pushing us up through there could relieve some of that concern here in the market, pushing us back up, and then we'll start moving back through and see if we can retest these recent highs here in IWM. Remembering that we still have a long ways to go before we're going to make all-time highs here in IWM. Now, if the bears were to have anything to say, once again, we're right tucked against this resistance. So if the bears were to have anything to say, this is where you'd be watching for it. And that possibility of a little pullback, and then we would start progressing back down. But I don't think there's going to be any worry in IWM unless we were to break the low of that big candle here. So we've got a lot of bearish work that needs to be done here before this turns into a major concerning chart in the Russell. Now, if we take a look at our VIX, well, it ended up with that good surge right at the end of the day. It ended up in a bearish engulfing pattern here. So fear easing here in the market. We'll want to watch that pretty closely because there really wasn't a whole lot of breadth to support that move yesterday. So if the bulls can continue to find inspiration this morning, then we need to see them push this on back down and maybe filling this gap here in the VIX, relieving some of that fear. So watch that carefully as we start to push back. But remember, it's always the higher low. It's always the higher low that can cause us a problem. So if we were to push back in here and and we catch any kind of bearish activity in the market and we create that higher low, that's where selling will really start to pick up. So watch that carefully if that were to occur. We've got a lot of work to push this all the way back down. Certainly possible in this market, but watch that carefully here because we did break through this little bit of a downtrend on that big pop up. Now holding of a higher low can create that problem for us here in the VIX. Now if we take a look at our T2122, T2122, the 4-week new high, new low ratio. By the end of the day, we turned this just a tiny bit higher. We were up good on this yesterday, and then we turned it lower at midday, and then we turned it just slightly higher here today. So if those bulls can find follow-through inspiration here today, then I see every reason that we could start pushing back up here toward this bearish reversal zone on the day. So watch that carefully in here. You will want to kind of keep in mind, however, we still have a little bit bigger space for the bears. So if the bears were to come up with anything to inspire them, we certainly have good room for them to move. We do want to notice we did break that little upside trend in here in that chart, so we'll have to watch this pretty closely. What we're really going to need is we're going to need a show of market breadth. We're going to need some good bullish push in here. Otherwise, be a little bit suspicious of the rally back if breadth doesn't follow along to the upside. Now, if we take a look at T2108, T2108 still struggled a little bit yesterday. A little bit lower, but I don't think it's terrible. If you look right through here, we've got good areas of price support in T2108 right in here around that 50%. So I don't see this as a really big issue here, but it is maybe just a little bit of concern of that breadth. It really shows how important these jobs numbers are going to be today and how this market reacts. So watch that carefully in here on T2108. If the bulls can find that inspiration, well, I think there's a good chance we could re-attack this area up here above 60% and then start stretching back higher. At the same time, though, we've got this wedge pattern going on in here, and those wedge patterns, again, it's about 50-50 either way out of there. So if the bears were to find any inspiration, break down through here might raise just a little bit of concern in the market. But again, I don't think it's going to worry us too much until we break below that 50% area here in T2108. T2107, percentage of stocks above the 200-day. Well, it managed to turn itself here to just flat to a little bit higher while it was down a good portion of the day. It was just that last 30 minutes of rally in the market that turned that back up. So still looking good in here on T2107, holding firmly above this 50% area. We've got a good area of price support in here, keeping in mind if those bulls can follow through, well, maybe we can retest these areas up here. And just notice we've got lots of congestion up here for that to work on in the chart. And if the bears were to have anything to say, where I would be watching is if this were to break below that 50% area. So keep an eye on that, T2107. Our T2101 had that decline in breadth yesterday. Now you can see an ever so slight little turn in this, because after gapping lower, we did rally in T2101, trying to get a little bit of breadth going. But remember, if we were to move higher today and continue to see this breadth falling, watch carefully. That sets up that whipsaw. That sets up that opportunity that we could move up in the pre-market and try to pump to the upside. And then if we don't see breadth, those bears can be emboldened and push that back into place. So what we need to see, if you're bullish, we need to see those bulls follow through here to the upside. Get us some breadth coming in Otherwise, the upside move here could be a little bit suspect, and we could end up with that whipsaw here on the day. So I think everyone should be watching for that potential of a whipsaw. Now, we're going to be watching for all of that around all of these economic reports, because we do have quite a few things in the economic calendar to be paying attention to, and it's going to be particularly on the jobs front. So first off here today, we've got the Challenger job cut report that will be out here this morning. Let me refresh this and see. Yeah, it's not out yet. So keep an eye on that here today. Last time we were at 62. 075, so we've been rising up on that Challenger job cut number here. We've got the ADP number that will be coming out. Right now, we're looking at about 68,000. Remember, the last time was 104, so we're seeing a decline here in ADP. This might be about the sweet spot to kind of ease the market's mind that we're not weakening too much in employment, so watch that carefully. And then if we take a look at international trade in goods, we'll want to be paying a close attention to that. We're looking for that in consensus. They're suggesting that our trade deficit here, goods and services, a negative 70.2 billion, up from a negative 60.2 billion. So keep an eye on that. This has been majorly improved over the last 6-7 months, but still, we don't want to see that going in that wrong direction here on international trade. So watch that carefully. Now, if we take a look at the jobless claims, this will be the more important number here today. Jobless claims coming in, they're suggesting 232,000, so an increase in jobless claims might raise that little bit of concern here in the market that our economy is weakening, that our jobs are weakening here. So watch that carefully here on jobless claims here today. After that, we've got productivity and cost. Productivity, looking for that to improve from a 2.4 to a 2.5, and they're looking for unit labor costs to remain flat. We've got PMI composite numbers. PMI composite 55.4, that's up from a 55.1. The services 55.4, that's down from a 55.7. But just keeping in mind that anything above 50 shows growth in the sector. So I don't think if we come in like this that there's going to be any major reaction to that number. ISM, however, is right on that line. We were 50.1 last time here on ISM, and they're suggesting it improves to 50.5. So it's going to be pretty crucial. If we were to fall below 50%, we could get a little bit of a negative market reaction on that. So watch that carefully. If we can get a better push above here, it would show that things are looking pretty good. The consumers are looking pretty good if our services continue to expand. And then if we take a look at our natural gas report in here, natural gas will be this afternoon, at 10:30. And then we've got a 4-week and 8-week. We've got petroleum status numbers that'll be out at noon. We've got Williams and Goolsbee speaking today, and a Fed balance sheet after the bell today. Now remember, as you're planning forward, the only thing that's really going to affect us tomorrow is going to be that employment situation number, and that could be the critical government number here after we compile all of these data points in here on jobs. Watch that one carefully here on Friday morning. That will be potentially a market moving number Friday morning, so watch that. Let's take a look at what we've got going on our earnings calendar here today. And our earnings calendar, a little bit busier in here. So you might want to pause this, grab a screenshot, of this for today. Probably the most notables here this afternoon are going to be AVGO. We've got CopArt. We've got DocuSign. Lulu will be in there. This morning, I don't know if any of these are really going to move the market all that much here this morning, but keep an eye on those here this afternoon. Could certainly be a bit market moving, so watch that carefully. Let's take a look at a few stocks that could be setting up for today. But before we do that, everyone, if you could do me that quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor, click that thumbs up button, leave a brief comment. That helps the channel to grow. Thank you so much for everyone who does take the time to do that. I do try to answer the majority, if not all of those. I don't get them all, I know that. But I do try to answer those. So if you have any questions or ideas for me, please put that in the comments. I really appreciate that. And remember, even an emoji counts that you have engaged with the video. So thank you very much for everyone who does support that effort. Let's take a look at some of these stocks that could be setting up. And remember, everyone, these are not recommendations to buy or sell any security. You need to do your own due diligence and be very, very careful in this market. Could be a little bit sensitive here over the next couple of days as we get through those jobs numbers. So be prepared for just about anything. First off, let's take a look. There's some oil sector stocks that have been doing really, really well. Take a look at APA. APA breaking through up here, really pushing out in this chart. If this can hold in here around this trend area, I'd keep an eye on APA. There may be some upside opportunity despite the fact that oil has been falling so much. Some of these oil and gas producers have been doing quite well. Take a look at CVX since its acquisition of Hess, continuing to push, and this has been in a majorly long multi-year kind of downtrending a move here, and we've broken above that downtrend, and we might be trying to hold it as support here. If we can hold that as support and see those bulls push on through, boy, I'd keep an eye on CVX. There might be some opportunities there coming up. Now, clearly, we've got a lot of resistance in here, so it's not going to be an easy path forward, but I would watch that closely on CVX. Other places that looking pretty good. Take a look at Abbott Labs here. Abbott Labs trying to hold in this nice little resting consolidation. Could be setting up for that next upside move. If this is our downtrend and we're just trying to sneak out from underneath this area, if we can get a little bit of bullish action in here, Abbott might be able to move right on through to the upside. Worth paying attention to, I think, and keeping an eye on that. Take a look at Boeing. Boeing continuing to set up here. I placed a price alert on this, and the fact that it pulled back yesterday really doesn't bother me at all. Just the fact that we broke this wedging pattern here to the upside, and then we're consolidating and resting in here. A little bit of volatility on the uncertainty that we're experiencing here in the market. Watch that carefully. If that can push on through to the upside, I'd be keeping an eye on Boeing. And take a look at Cummins, CMI. Cummins also setting up in a nice little resting consolidation back to support and trend. I'd keep an eye on that. This broke out up here. Heavy equipment has been doing quite well, so I'd keep an eye on Cummins. Now, if you take a look at John Deere, here again, heavy equipment, but not looking so good here. As a matter of fact, I would be a little bit worried that John Deere could be ready to fail through this area of price support and really turn into kind of an ugly short. So watch that carefully here in John Deere. They're not all perfect, that is for sure. You might want to be keeping an eye on some of these uranium plays out there. UEC running right back to the upside, looking good. good here on UEC. Any rest or pullback, I think, could set up an opportunity there. If you take a look at URA is in a setup here. So I would watch that closely, moving right back up, made that higher low, pushing through. We bust through this resistance up here. I would look for some more highs in URA. You could look at uranium here on UUUU, breaking through, holding support in here, trying to show that bullishness. That could easily push on through to the upside as well. And last but not least in that sector, CCJ has been doing quite a lot of struggling in here in this resistance, but you will want to note that this right here just made a little higher low, and if we can get some energy coming into the market, we might pop through that resistance, stretching on up here in that chart. So keep an eye on CCJ uranium, looking pretty good overall. If we take a look at our financials struggled in there yesterday, but ended up rallying right back. So we've got a double nice little double test here, almost what you'd call a tweezer bottom pattern right here on XLF. That little resting pattern in here, if we can get a little bullish action coming in here, I would keep an eye on that, holding trend, holding support. You might want to look at some of those big banks out there. Take a look at like BAC holding in there, trying to move in that beautiful resting pattern, could push right on through to the upside. Do think that's worth paying attention to here in the financials. If you take a look at utilities here, utilities kind of fell apart now. Remember, when we're in a market like this, we can have both long and short trades that could easily set up here. So watch this carefully. You can see we broke this support and trend here in the chart. This rally back, I would be watching pretty carefully. This rally back could set up that short in XLU, so keep an eye on that here in the chart. You might even want to start keeping an eye on some inverse ETFs. If we take a look at like PSQ here, PSQ inverse ETF on the NASDAQ, notice in here that we're holding these little higher lows and we're slipped out from underneath that downtrend in here. If this were to hold, if we were to get some bearishness coming into the QQQ, this would be a pretty easy trade in here on PSQ to pick up an upside or inverse on QQQ if that were to falter. This is the only one right now, QQQ, that shows us those potential rotation or potential reversal here in the NASDAQ. None of the other indexes are showing that yet. So watch that carefully here. PSQ might be something to be paying attention to. Continue to follow through on STX, continue to look great. Any rest or pullback, that continues to set up that opportunity. I still think RIG has an opportunity to set up here. You can see we broke through this big downtrend here in RIG, pushing up, and now we're resting back to test this area of price support, this upside trend, and that downtrend break in here, all right in that area. So if we can catch a little bullish action in here, there might be an opportunity there in RIG. So keep an eye on that. So with that, everybody, I've run this video a little bit too long. Thank you so much for being here today. Thank you so much for supporting the channel. I really appreciate it. You all take care. Be safe. Have a wonderful day. As always, I wish you all the very best, and I will see you right back here bright and early Friday morning. Take care, everybody.
Black and white candles, my stars in the dark. Price is my king, got that fire and spark. Rideways my ranch on the trader's trail. Trading with heart where the profits prevail.